Hey traders, Happy New Year. Today is January 4th, 2016. This is Trader Tim from E-mini Mind bringing you the first market analysis video of the new year. 2015 was pretty much a wash in terms of open to close. We had a lot of sideways action, volatility in the mid-20s, which made for some really good day trading intraday opportunities, but not a whole lot going on for the swing trading variety. If we look at the VIX over the course of last year, you can see most of the year and currently still sitting right around that 20 mark. Really good day trading occurs around 25 to 30, and that's really my favorite time to be actively day trading. And then really good swing trading occurs down here in the lower teens. Now last year we fluctuated a fair bit aside from kind of late spring, early summer where we huddled below 15. But on the whole, volatility was pretty low. We moved sideways, we broke some highs a couple of times, but really couldn't push through to anything major. If we go out to larger time frame on the ES, let's pull out to a weekly chart. And we've got some drawings from further back in terms of drawing a full halfway back and seeing where that takes us. And the reason I'm pulling from back here in July is because we had a series of retracements that used this anchor from lows to highs that were taking us higher all the way up into really the middle of last year when we made that 21.32.25 high. And so pulling back to 1840s, we have yet to break that new high. And so if we pull from lows to highs, just most recently, you can see we're right kind of hovering around that 50% level. Now the target is up in the 2275 area, which certainly going into the year could be a possible scenario to play out in 2016. If we go out a little bit more, if I go back to the profit chart, go to a 20-year chart, you can see how even though 2015 was pretty sideways, on the whole, we're up near all-time highs. We are, for the most part, haven't seen a major substantial pullback, and you can see the pullback in 2015, how small it looks in the context of a larger monthly chart on the S&P. So if we go back to that 1-year chart, you can see this pullback here really not that big, and so you do get a lot of bulls stepping back in when you get a move like this because they're remembering, hey, the grand scheme of things, this is just a great buying opportunity. And I use these opportunities to add to my longer term positions. I have everything from stocks, options, futures, as well as some mutual funds in things like the Vanguard funds that I'm not really looking to trade on an active daily basis. I'm looking to contribute and park my money so that it can return me dividends and pay me back off of a larger sum principal of cash. So using these bigger pullbacks as a way to, or an opportunity to get into these longer term positions is a great trading opportunity. So going into 2016, excuse me, the first couple of weeks are usually pretty slow. I do like the price action we had today with the gap down and the bulls pushing us back up, so getting a nice hammer formation. I'd like the stronger volume, and so what I'll be looking for is for the bulls to push us higher and to break today's high. And if we can break today's high and get some follow through, then I would look for us to fill this gap on the on the new year. If we can do that, and if we can start breaking some of these swing highs in one fell swoop, then I would look for potentially a new high to be made. If we can get the momentum off the year right from the start and to take us higher and to break some of these swing highs, then all of the people who have stops above here would see those stops hit. The bears that would be taking shorts up here, if they are breaking these swing highs, their new shorts are getting stopped out, so they're taking a loss on the trade, selling those shares back to the bulls. So there's a lot of different scenarios between traders that could push the market higher. Now, at the same time, the flip side of that is if we break lows tomorrow or going into this week. If we start breaking lows, everyone who's long is going to potentially start having some of their stops hit as we break these swing lows. And the bears that are getting short at highs may be looking to add to their positions, push the market lower. But in these first couple of weeks of January, it's okay to start slow and ease back into things. I usually take the first week completely off and just watch the markets, get back into my groove, get into a routine, and let things kind of start to work themselves out and let the market show me where they're potentially headed. So not overly bearish or overly bullish at this point in terms of a bias. So for putting on swing trades as we go into maybe the second week of January, there's nothing that really stands out in terms of having a portfolio that's weighted heavily in one direction or another. And if we go through some of the bigger names, you can see that they're not really at highs or at lows. They're just kind of in the middle. So Apple, Google, another one. Google was one of the only ones that was kind of hanging out up here at highs. If we go down to Netflix, kind of back in the middle, we had this double top up here. Stocks like Home Depot, off of its highs, but actually, I do like Home Depot as a potential long play coming up. So not just yet, but in the coming weeks. But stocks like FedEx, kind of just hanging out down here. Let's see, Best Buy, another one that you tend to get some volatility around the holidays, well off its highs. Amazon, the move off of its highs. So nothing really setting up just this minute, but potential as we go into the first couple weeks. So I'll be keeping my eyes on some of these. In terms of day trades, I like the price action that I'm starting to see on the euro with some clean trending Heikin-Ashi candlesticks. Clean trending chart, but with the Heikin-Ashi candlesticks, you get the nice trending colors, and that's telling us that there's some follow through in the market. So when we get into these trades, we can expect them to start moving immediately. So between the ES coming down to its 1970 50% retracement and potentially taking us to a new high, we also have the potential to, if we break lows, come back down to the 1840. And so the way I would play that on an intraday basis would be to look for the 15-minute trend and look for the 15-minute trend to start breaking. So if we're trending up, for example, if we start to, at this point, move higher, well, the current 15-minute trend is essentially we're trending down. And so as we form this hammer, I would look for the 15-minute trend to start moving higher and placing trades on the 512 tick chart. On the euro, I would just be looking at the 512. I'd look for swing high breaks. So identifying we have a high and a low on the day, and looking for a swing high break to get long. So let the market rally a little bit, break a swing high, and then pull back. So we're not getting long at highs, we're letting a little bit of a pullback occur, and then letting the market sell off, maybe take out a swing low and pull back, get a little bounce before getting into a short. So looking at some of the bigger picture stuff as we start the new year, but also keeping in mind that it all comes back to identifying the trend, identifying the swing highs and swing lows, and when we start to break those swing highs and swing lows, we're either going to get a reversal, meaning we break a low and the bulls see that as a great buying opportunity because prices are low and they immediately push us higher, or we break lows, stops get hit, and the momentum starts to gain and we start to really trend lower. And the same thing can be said for highs. We start to break highs, we get momentum, we start to break and make new highs, or we just barely break highs and we're immediately met by bears who push the market lower. So those are kind of the scenarios that I go into for, always on a daily time frame, intraday time frame, whether I'm swing trading or day trading. I'm always looking to identify the swing highs, the swing lows, as those are places that the market will react strongly. So with that, I hope you have a great start to the new year. Again, we're going to kind of take it easy in the first couple of weeks. I've got some live trading webinars coming up, some stuff that I'll be doing with Infinity and Trader's Log, as well as other webinars that we'll be holding for VIP members. So a lot of cool stuff going on in the new year, and I wish you all the best, and we'll talk to you soon.